This is the video for Friday, July the 26th, and it's Sunday morning. Let's take a look at the underlying for the market. We had advancers blowing out the decliners 66% to 28%. Reasonable volume in the Dow. One of the people watching Thursday's video, Luis, mentioned that I should look at Boeing because it's affecting the Dow just like Caterpillar is. And I answered that I'm not a big fan of the Dow index because it's only really 30 stocks, and I don't think that the Dow is representative of the market as a whole. So that's why I look at the S&P 500 with 500 stocks. And I mentioned to him that, also some people are looking at the Russell 2000. Now, all the charts move in tandem together, but personally, I think it's the S&P 500 companies that is setting the tone for the Dow and the Russell. The NASDAQ is something different because it's specifically related to tech stocks and has that narrower vision. So the S&P 500 is my choice. And you can see that the volume in the S&P 500 was relatively good, and that's several days in a row now where we've had good volume. And it was just a creeping up day all the way. So everybody has got their money in the camp that says, everybody who's invested in the market has their money in the camp that says that the Fed is going to lower interest next week by 0.5%, maybe 0.25%. But what if it doesn't? What if it surprises and says that we're going to wait until the September meeting? Then we could see a surprise. So let's see what kind of surprise we might be in for. The SPX finished at a record high. And this is the trend line that we've been looking at for some time now. And it pulled back. It had formed the trend line once it made this third touch here on August the 4th, 2018. And then it came back in July to test it and then immediately dropped back. Came back again to test it on later July 24th and dropped back. So now we've got a clear break above the trend line. There's no question now it's above the trend line, regardless of where you draw it. What will happen on Monday? The Fed is going to make an announcement on Wednesday. That's a big day. I mean, Apple is that day, and WDC is that day, although that's not a market-moving stock. But the Fed and Apple are going to have a double whammy effect on the market Wednesday. So I would expect Monday and Tuesday to be congestion and not to be moving very much. Certainly not, I don't believe it's going to be making new closing highs. If we had ended up at 3018, we'd have hit the trend line. We ended up at 3026. Let's take look at something interesting. Let's look at a monthly chart. Let's look at a 3-month chart of the S&P, and this is the motive wave calculated Elliott wave pattern going back to 1995, showing that we've got the potential to be up here in the 3200s to complete this let's see, which one is it? This A, B, C pattern of the Elliott waves, and then we would probably start, well, it would be a new letter. Regardless, I'm not an expert by any means in Elliott wave, but I do want to point out that if we take this high and this 1995 low and do a Fibonacci extension, we see that 100% is, of course, right along this line. And we had a pause there in December of 2012, and then we had a clear move upwards, bit of a pullback. But let's see if the other Fibonacci areas fit. Well, 138.2 seems to fit because we had a lot of congestion here. This is almost a year's worth of congestion around 2012 on either side. 161.8, not a lot of congestion to consider. 178.6 is where we had 6 months worth of pullbacks in the end of the fall and the late 2018, and now we've broken above that. So this seems to indicate that if the market gets its wish and the Fed funds rate is dropped by 0.5%, and then another cut comes in September, that we are on our way to 3,152, which would satisfy 238.2% on this Fibonacci and the C point on the Elliott wave. So that's going to be the target that we're looking at. That's a pretty bullish market, and it would last throughout the summer and into the end of the year. I don't know if there are any banks that are calling for 31.52, but I think it's a reasonable target if the Fed does what the market wants it to do. Now let's take a look at Apple. Let's just go back into Apple and let's look at it on a 1 day. Apple was stopped again by this gap. So every day of the week last week, this gap played an important role in where sellers were positioned. I don't expect it to break into the gap. If we have strong earnings, I expect it to pop through the gap and leave the gap intact. If we have weak earnings, then we're going to see quite a negative reaction in Apple. Its all-time highs were right here in the 2011, 2012 area, and we're creeping up into that area now. So Wednesday is the day for Apple. Caterpillar ended up on a down day, just down 10 cents, but nonetheless staying off of this flat cloud and using that as a place to bounce. I still believe that with the right market conditions and resumption of trade talks in China, if they show any improvement this week, that the 135.71, which is a 50% retrace, is in the cards. Gold is suffering a little bit here. What we have here is a bull flag. It could break out, and we're going to keep our eye on this bull flag pattern. But that's going to be correlated to the dollar, of course, and the dollar will get weaker if the Fed funds rate drops, and that could have a positive impact for gold. So let's just draw a little flag here. And let's keep an eye on this flag. WDC, just down 10%, but also building a little bit of a flag. It's very China dependent. I'm not holding any WDC. I'd like to see a test of 55.52 that could happen this week. Whirlpool, I did double my position in Whirlpool by buying some stock and selling next week's 150 calls for a net cost of about 146.80. And Whirlpool is looking good. It's above the 38.2%. I'm adding another trend line for us to follow now. This trend line certainly was real. And once it established itself 3 times, the 4th time, the 5th time, the 6th time, the 7th time, it served as either resistance or support down here. So I'm building another trend line now. It's going to be from this point to this point. That's only 2 points, and that's not a trend line. But it will become a trend line if it is resistance for candles. So I'm going to basically put an alert here that when we touch the trend line, I'd like to have an alert set up, and that would be at 150.84 for Whirlpool. I'd like to see us end at 150 next week, and then I would be able to take my 150 calls and roll them into next week, or just take the trade and exit and wait until the stock breaks the trend line. This trend line has been remarkably accurate for us because we did not buy here. Here was when we formed the trend line. We did not buy here. We watched it pull back, pull up to the trend line, and we said back then that if it passed over the trend line, we were going to buy. It didn't. When it came back to get support on the 200 simple moving average, that's when I started to buy again, using covered calls all the time. So that's where we are. I think we are a market in consolidation for 3 days. Of course, I'm getting that message because it's Sunday and the markets are closed and TD Ameritrade is not sending any data. So I think we're going up, but that's going to all be dependent on the Fed decision at 2 o'clock on Wednesday. And then, of course, the market is going to wait a little bit to see what happens with Apple after the bell. So hope you're having a good weekend.